At Farms.com Risk Management, we understand that commodity price risk management and sound financial advice are essential in today's volatile crop and swine sectors. Visit our website at www.riskmanagement.farms.com.
Welcome to the Farms.com Daily Market Commentary for March 7th, 2012. This is Michelle Lemerant, Commodity Research Analyst with Farms.com Risk Management. Today we wanted to preview the USDA's March 2012 WASDE report, which is scheduled to be released on Friday, March 9th at 7:30 a.m. Central and 8:30 a.m. Eastern. The USDA is not expected to make any shocking changes to the corn balance sheet in the March WASDE report. Slight changes are expected to be made to corn exports, which should be revised higher, and South American corn production, which is likely to be revised lower, but nothing too drastic. 11/12 U.S. corn ending stocks are expected to be revised slightly lower to 780 million bushel, down from February's estimate of 800 million. The average analyst estimate for 11/12 global corn ending stocks is currently 123.47 million metric tons versus 125.35 in the February report. Ahead of Friday's WASDE report, the 11/12 U.S. soybean ending stocks estimate is expected to be lowered to 260 million bushels compared to February's estimate of 275. The average analyst estimate for 11/12 global soybean ending stocks is 57.8 million metric tons versus February's 60.28. Only slight changes are expected to be made to the 11/12 U.S. soybean export estimate as the country continues to face stiff competition even with anticipation of reduced South American soybean production. Last month was a record February for Brazilian soybean exports, which reached 1.56 million metric tons. February sales took a current total for the 11/12 marketing year for Brazilian exports to 10 million metric tons, more than double the 4.04 million metric tons at this time last year. The record sales highlight the continued demand for Brazilian soybeans. Most analysts are expecting the USDA to trim its estimates for both U.S. and global 2011-2012 the wheat crop. The average analyst's expectation ahead of Friday's report is for the U.S. 11/12 wheat ending stocks to see a slight revision down to 830 million bushels compared to February's estimate of 845. The 11/12 global wheat production estimate is expected to see a 500,000 metric ton downgrade to 212.6 million metric tons. The U.S. wheat export situation continues to look bleak due to substantial competition from Australia and the Black Sea region. Australia's record wheat harvest is forecast to leave the country with 10 million metric tons in ending stocks at the end of the year for the 2011-2012 marketing year, which is up 25% year over year. In addition, India is now exporting excess wheat inventories, which are currently pegged at 21.3 million metric tons, up from 17.2 million metric tons last year, and 400% of the government target. Private traders have indicated that the country is attempting to reach a deal with Iran despite low global prices, since the country lacks adequate infrastructure and must make room for the 2012 harvest. So bottom line, no big surprises are expected in Friday's March WASDE report. It was a fairly slow news day today, as markets are likely buying time as we approach the March WASDE report planting season and the March 30th planting intentions report. The planting intentions report is expected to have more of an impact on markets than the WASDE report on Friday, but traders are still looking for a reduction in ending stocks numbers. Most analysts seem to be anticipating a somewhat bullish report, mirrored by the fact that managed money funds have come back into the grains, now holding more long positions in soybeans than they have at this time last year. A lower U.S. corn ending stocks number, particularly one below 800 million bushel, will only confirm that the 11/12 corn supplies remain tight and will be supportive of higher corn prices for the front-month future contracts. This will be particularly bullish if the USDA continues to adjust demand higher, as we have been projecting for quite some time now. Deferred corn contract months for the 12-13 marketing year will still need more time to climb higher. A friendly March WASDE report is necessary to incent corn to break out of the tight trading range that it has been stuck in for the past 2 months. If the report is bullish and corn futures can break above the 200-day moving average, as you can see in the chart in front, prices could move back to $7 per bushel if there is better demand for old crop corn and a weather scare for new crop. Seasonally, prices do tend to move higher from here, but keep in mind that prices are already historically high. In other news, strong demand and tight supply of Western Canadian feed wheat have led cash bids to rise in the past month. According to an analyst in the Marketplace Commodities, there have been more feed wheat bids than offers, as end users look for coverage ahead of the spring and summer. Farmers have been reluctant to sell feed wheat due to recent strength of canola, wheat, and peas. According to Prairie Egg Hotwire, current spot bids for Western Canadian feed wheat are up 33 to 63 cents per bushel from this time last month, now as high as $6.18 per bushel in Saskatchewan, $6.53 per bushel in Manitoba, and $6.07 in Alberta. A record number of canola acres are expected to be planted in Canada in 2012, with analysts projecting between 18 and 21 million acres. The increase in acres have been led by high demand, which has caused a significant price rally in the past 2 months. One major source of demand, which is China, has increased their Canadian canola imports to 2 million metric tons this year, up from just 1 million metric tons just 2 years ago. The country is expected to import up to 3 million metric tons in Canadian canola next year. Analysts are now speculating that if soybean plantings in the U.S. do not rise past the 75 million acres that we saw planted in 2011, ending stocks for the 12-13 market year could actually be a negative number. Oil World lowered their 11-12 Brazilian soybean production estimate to 68 million metric tons versus their previous estimate of 69.5. They noted that current yield reports were lower than expected. Analysts Dora Ministry are suggesting that rising veg oil consumption from India will push the country's veg oil imports to 9.5 million metric tons, up 9% from the current expected levels. Local production is expected to cover only 7 million metric tons of the country's 16.5. Cash hog calls in the U.S. are steady to mostly lower today, as packers seem to have finally decided that they are tired of operating at negative margins. Estimates for Saturday's slaughter are currently 40,000 head, down 20,000 head from last week. The pork carcass cutout value fell 11 cents per carcass yesterday to finish at $84.85. As before, the pork market appears to be in balance with supply and lacking spark. And lastly, in contrast to recent Chinese reports, the general manager of Sinograin said that as long as it is profitable to do so and there is need, they will continue to import corn. China said that they would also consider Argentina as a source for corn. He suggested that last year's purchases were one of opportunity and not planned. That's all for today. Have a nice day.